Rana Gupta is with us at Manulife Investment Management. Rana, good to have you with us here. Good morning. Prashant this side. Thanks for joining in. So now, of course, all eyes on who gets what in terms of ministries, and I think we will get that pretty soon. But it is NDA 3.0, Modi 3.0. Let's talk about which are the sectors where you think the impetus. We will see impetus. Will it be this? Will it be once again a large infra-led push that we've seen for the last 5-6 years? That majority of the thrust will be, or do you think there is any indication that there'll be a little more attention on the consumption side as well, because both are relevant for them from a market perspective as well. Go on, Rana.
Oh, absolutely. Good morning. I think if you look at last 3 or 4 years, the fiscal consolidation has been really sharp, from 9% to about 5.1% in last 4 or 5 years. But within that consolidation, we have seen the capex, the infra push, capex to GDP has moved up from 2 to 3.4% of GDP. At the same time, the revenue expenditures have come down from 15% to about 11%. So as a result, what you have seen is that pretty strong GDP growth over the last 3 years, 7-8 percentage points or thereabouts, but led by infra and investments. Now, we do not think as a result of this election, there will be a U-turn of sorts, but we definitely think that there will be a much better balance going forward. While the revenue expenditure, while the capital expenditure can grow at 10 or 12%, as over to 14-15% earlier, but the revenue expenditure has some room to go up from the current levels. In other words, I think we expect there will be some welfare measures that will make a comeback. And that is, again, not a U-turn, but a much needed balance that should come back. And that should come back in the areas of education, healthcare, and also through welfare infra-linked, like, housing, so on and so forth.
Okay, got it. Mr. Gupta, what's your take on PSU stocks? I mean, have you participated in the rally over the last couple of months? And now, I mean, if yes, are you going to be taking some profits off? What's the stance?
See, the PSU stocks, if I just link it back to my answer to the earlier question, whereby, the government the growth was largely infra and capex led. So all the capex facing PSUs did extremely well. Now, some of these PSU stocks, whether it's defense or whether it's in construction, whether it's in capital goods, has gone to valuations of 30-35 times PE. Now, that is comparable with the private peers. And also, we are talking about companies where the owner and one of the major client is government. And we are also talking about somewhat better balancing of capex and revenue expenditures. So I think this industrial construction facing PSUs, which have done extremely well, and I think fundamentally the companies will continue to do very well. But it is just that now the fees are beginning to look very high. On the other hand, if you look at the state-owned companies in the areas of energy or power or even banking, there the stocks have done well, but the re-rating has not been this sharp. And our base case is, again, like I mentioned, repeat again, no U-turn, but better balance. Even a better balance will be good for the PSU companies in the large PSU banks or in the energy sector or even the utility sector. I think this is where we have seen some re-rating, but the valuation is not as high. So we continue to remain bullish on this segment of PSUs.
All right. Hi, Rana. Good morning and good to see you, Ben. Rana, what about the FMCG stocks? The monsoon year in India has already hit, which is great news. We want a good monsoon. And now most expectations are we'll have an above average monsoon, which will be good. In addition to that, you have a new government that could focus a little bit more on consumption than capex. Not entirely taking their leg off the pedal on capex,
yes,
but maybe some kind of focus out there, which could be good. And FMCG names, most of them are trading at pretty decent valuations. Your view on them, the likes of Lever, Dabur, Marico, they have suddenly come back to life.
Oh, absolutely. I think they have started coming back to life since the earning numbers came, right? And the earning numbers were a bit ahead of expectation. Guidance was a bit better, and these stocks jumped 10, 12, 15%. That just goes to show the under ownership that is there and how a small rebalancing the economy can trigger this move in this stock. We remain pretty much of the view that the FMCG stocks now, they will their earning downgrades that was ongoing, that has now bottomed out. And going forward, the growth might even pick up. But, these are FMCG large companies. When I say growth pick up, it cannot be like a very high number. It can be 3 or 4%. But considering that you juxtapose that with the earning the reasonable valuation of the companies, in the context of its own trading history, that's first, and the under ownership, I think FMCG stocks can be in for some good time.
Okay, so FMCG is a space that you like. What else, Mr. Gupta? What are your top favorites at this point in time in terms of themes?
See, we've referred so far coming into, let's say, even on 13th May when I was in channel, we were highlighting that we were thus far backing industrials as our top sector. But, there's some rebalancing required. So I think the sector that has underperformed, if you look at last 1 year, industrials, real estate, PSU as a fact, they are up between 80 to 100%. Whereas FMCG, private sector banks, they're up like 10 to 20%. Now, that kind of performance disparity, I don't think will continue, especially in the context of the new government and some orientation of expenditure towards consumption, not cutting capex, but some orientation towards consumption. In this kind of environment, I think the sector that has not done well, consumption, private banks, they deserve a look. While at the same time, we are not suggesting that industrials will suffer, but I think what I'm really suggesting is that the industrials, the real estate, the PSU, as a sector, they've done very well, but going forward, one needs to be far more selective in that.
Okay, all right. Rana, what about the metal space? Some of these metal-related names are doing very, very well. Just to highlight a few of them, you have IMFA, that's Indian Metals and Ferroalloys. That stock is flying away. It's up close to 6%. We had highlighted this last week as well. A few of these politically related names, which have a good fundamental business as well. So I think Indian Metals and Ferroalloys should come up for you. We have Nama Limited as well, another one that's moving up. These are smaller names, but just highlighting because they've moved up. How do you approach some of these metal stocks? Ferrous versus non-ferrous. The optimism is around China recovering, which may or may not happen. But how do you approach these stocks?
So first of all, we look at largely the stocks which are pretty sizable and a largish cap rather than, the micro and mid caps which are even could be somewhat politically connected. So we look at the top tier companies in the metal space, just to be clear. Now, within that, I think the steel market has undergone transformation. I think not just in India, but globally. There has been minimum import price that has been implemented, which protects the domestic steel companies to a certain extent. Having said that, I think the steel companies also have done quite well. So I think for steel companies, the risk reward looks balanced from here. On the other hand, if you look at the non-ferrous space, and in non-ferrous space, there is this one company which has a large downstream operation also. We like that because the earnings are far more predictable. The business is growing. They're putting their cash back into further expanding capacities. The valuations are very reasonable. So we continue to like very specific non-ferrous companies.
Which one? You were going to give us the name, I think so.
Unfortunately, I cannot give you the name of the company, but
okay.
This is one of the largest non-ferrous company with a downstream operation. So,
with a promoter who's a little bit tricky?
No. We stay away from promoters where promoters are tricky.
All right,
okay.
Nice one.
Then it's the one. It's the one that has some operations in the United States as well, right? Which was looking at the IPO.
They have operations worldwide.
My God, I mean,
nicely asked and nicely
this has to be It has to be in that.
All right, we'll leave it there. Rana, thank you very much for joining us. It's a pleasure and good speaking with you here on CNBC-TV18. So that is basically metals and mining and focus towards the end of that conversation and a view on the market as well.